I'm going to go over the outlook for swing trading, which will finish at the end of this year. So currently I'm on my yearly time frame, so I've put 12 months in my time frame candle. So this year from 2001, which is far away, this was a bearish OB, and then since then in 2022 we came into that 2001 point of interest and then we reacted bearish. So 2022 closed below this candle here, which was a bearish point of interest. So that gives you an indication that 2023 will follow up to be bearish, and so will 2024. So speaking from technical alone, that is what is actually happening. We've had a bearish dollar for the past months, and then so fundamentals are also supporting a bearish dollar. So that's a good thing that those two confluence and give you a better indication of what to expect. So what I've basically drew to the right of this candle is just a candle of 2023 and what I imagine how it will close. So I think we will close inside this bullish OB and hopefully disrespecting it in 2024 and then coming down to here. So I'm going to move away from my yearly to 6 months time frame. Yep. So just half the time frame. I'm going to get rid of this, get rid of this. So this here was a 6 months FVG, and this candle here, which was created on 2nd of January 23, actually tapped into the FVG, but then we failed to react bullish because this is a bullish point of interest. What if we were to be bullish on the dollar in 2023, we would have reacted bullish from here, we would have just done this, and we wouldn't have closed inside the FVG itself. So therefore that's another indication that we're going to be bearish. Let me just mark out this quickly. So we failed to go above from here, and then the next candle, which was created on 3rd of July just recently, is now actually going to most likely fill this FEG up completely, and we're going to land ourselves inside this OB, which was created on 1st of July 2020. And then what could probably happen from here is we reach down to this point of interest and then react bullish and then go down again. So that is the expectations for now, and this point of interest, just to give you the price level, it is 97.622. So that's where I think we should reach on the dollar before we start seeing some bullish structure for a while and then we go bearish again. So going down even further into my time frame, I'm going to keep that line the same. In the monthly time frame alone, we've been consolidating, and I'm just going to highlight that. So all of everything inside this grey box was just up, down, and it's not really giving us much of a sense of direction where the dollar is heading, but from fundamentals we know we are to expect a bearish dollar, and for time frames higher than the monthly time frame like the 6 month and the yearly, we know that we're going to have a bearish dollar. So this, from speaking from SMC concepts, is accumulation. So that's when orders are just building up, there's not really any side being taken, it's just been consolidating up and down in a range. So what most likely comes after accumulation and consolidation is the manipulation phase. Whether that manipulation phase actually comes, quite dramatic, will depend on the fundamental news which comes out when we have a breakout of this range. So what the manipulation could probably look like, considering that we're going to have a bearish dollar, would look like this. We're going to come up to this area and then go down, but then that doesn't need to happen sometimes. Like that manipulation, we don't need to have like a big candle closing above here and several candles going up. That manipulation can be done in one candle. So we could just have one, the next month we might just have one big wick and then go down from here. So therefore that, like this wick here, like we were consolidating here. So if I was going to draw this same thing out. So this exact thing happened around here. So image this as like this here. So we were consolidating in a range, and then we just had one big wick, which was a manipulation to manipulate people that the dollar's going to be bullish but it wasn't. It was just a wick up to take out liquidity from this candle here. So from this month, created on 2017 March candle. So that was the manipulation, and then we had a bearish momentum down, and we reacted off this bullish OB here, and then therefore we went up into this early OB, and now I think we will most likely will do is have a wick up here sometime. It doesn't need to happen, but I think we most likely will actually happen. But then I'm not going to dwell on it too much if it doesn't happen, because my bias is bearish and I will act with confirmation if I was to short anything in favour of the dollar. Therefore, inversely, I'll be long in EU and GU, and SPX is supposed to move inverse, but it's kind of went away from confluencing well with the dollar, and it just moves as its own pair. So fundamentally and technically, looking at long-term dollar, we are most likely going to have just bearish dollar, but then I am still open to expect a manipulation up and then dollar to go down again. And the best target, I think, in maybe March 2024, I think we will end up here. But then that also depends on the high impacting news drivers which come out in between here and here, will obviously drive price down to this level here, which is 88.240. So do expect bearish dollar, and then therefore expect to swing trade longs on your EU, GU, and anything basically against the dollar. So any pair which looks like XXX USD, you will be expecting longs. Unless it's a pair like which is affected by oil as well. Don't really know how that's moving, but that you need to take into consideration if it's a pair which is like the Swiss. If you are trading that, you need to take in consideration of oil, anything, any news which is getting basically pronounced in favour of oil or not in favour of oil. So the levels I would note down, sorry, this FVG here, these are the targets. This is my next target. So I just want us to go down here, to be honest. I don't really care how we go down because you'll act with confirmation. So you can still expect this and then come down. But the target is this level here, which is your, 98.309. So I'm going to target this for the next few months. And then I will see how we behave on this. Maybe if we reach down here, we have our manipulation up and then we go down. We don't need to maybe have it. That manipulation could be so small, like from looking at this, it could be like this and then go down. So that's for the dollar. And for SPX, I've already done it, something for the SPX. So I'm just gonna zoom out all the way. Oh, we've been our highest point, right? For the SPX right now, I don't really have much of a bias because this pair is obviously a stock, so you need to be up to date with your fundamentals on looking at every asset included in this stock, so like your Apple and other assets which make up the US 500 index. You'll need to look up to them, but this point right now is the next target, which is my 4377.5. So I will just be happy to come down to here, to be honest, and then I'll see what I favour after this. So if we disrespect this area, I think we will go down somewhere around to these lows, which have been protected and none of these have been taken. So that's all liquidity built up while we were pushing up. So if we disrespect this, we will take out all of these lows, which is from here. So, oops. So all of these, I'll just draw it out actually. So all of these lows here. I think this low will be protected. The reason I say this low is protected is because this low was a low which reacted off this OB here. And once price makes a low in a point of interest, that low is most likely to get protected until it takes out some sort of liquidity, and this is a liquidity it needs to drive up. It doesn't need to go down here because then that's kind of pushing it. If you go from this range, we're already deep in discount, so the next thing after it takes out is look to take out liquidity, which is built up around here. So that's pretty much it for SPX and the dollar. And I think I'll do quickly on my outlooks that I posted. That. Yeah, so this week's outlook on the dollar. I'm expecting obviously bearish dollar for next week as well. So this is my point of interest, which is the hour to FVG, and everything else in my checklist has been ticked off. So I am quite happy to take a short from here. But then since it's a Monday and it's London opening, my plan says I'm not trading London. So I think if this area is already tapped in by London, I obviously have missed a trade. But then if Asia consolidates and then London also consolidates, maybe bearish, I will be looking for a short from here in New York. And inverse to that, depending on what EG is saying, I will be looking to long from either this H2 FVG or this OP down here. And same for the pound. We might create a liquidity pool below this PDL, and then I will probably long from here. But then this also depends on if EG favors the long on the pound rather than the euro. So this is what the trade could look like on the pound, and this is what the trade could look like on the euro. I've already sent this in the chat. Yeah, so there, just aiming for a 2R somewhere. So yeah, this is what the trade could look like, but then I'll wait on EG to confirm which one I should take. So for the euro and the GU, I normally look at the dollar, then I'll look at the EG, and then I'll just pick up here. I've decided to just stop annotating the euro and the pound and just focus on this, because if something isn't confluencing in the dollar and or taking off in the dollar, I'm not going to take it in the U and GU, so I shouldn't waste much time on the pairs. But that's pretty much it for the outlook.